Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at a commodities technical analysis update of a variety of different commodities. I'll give you my financial opinions, and we'll also go through the dollar, the 10-year, 30-year yields, then through all the different commodities that I look at in precious metals. So let's dive in. We'll start with the dollar and work our way through it. Today I'm just going to start with TTF. Natural gas, Dutch. Since I don't normally go over this, I'll go over it first, and then we'll go through the normal thing here. So this is TTF natural gas. We've had a major sell-off here, and I know some people are saying, "Oh no, they've got full storage capacity and stuff like that." The reason this is going to be ultra volatile at the beginning of this winter is they can't flow natural gas through pipes anymore. They're doing it all through LNG. And if your storage fills all the way up, what are you going to do with the natural gas that's on the boat then? They can't take it. But their flow rates are going to go faster than their storage can. So if they want to keep the storage somewhat filled as they eat through it, and it's highly dependent on weather. They've had warmer weathers right now, and that's been filling up. So right now, TTF, and this looks bullish here for a move higher. It came all the way back down because of storage issues, and now it's looking like it's putting in a big bottom. So I'd actually be bullish on it. But I just wanted to talk about TTF natural gas. Remember, it's flow rates. Just because you have a full gas tank doesn't mean you can drive across the entire United States. You can only go a certain distance or a certain time given the storage, and then it becomes a flow rate issue. If you have very cold weather or very warm weather, you may not use as much in storage. If it's very cold, you may go through the entire storage. And if you have no flows coming into it, it becomes a flow rate problem. So starting at the DXY, our normal kind of thing going through here, the DXY is a relative strength indicator. Let's go to the dailies here. We were higher today, up 0.09, basically a flat day. To me, when I look at this, I still think we are going to go lower in the dollar. I see larger selling pressures leading into this and a small bounce, and I think it's going to roll over. So I would still be in the camp that the DXY will weaken in the short term. Looking at the 10-year yield, we're higher today, and we can throw a trend line on here. If we just threw a trend line on this guy here, you could say that we've broken that trend line and that yields could head lower. And that is a possibility on a short-term trend line move. So is inflation peaking and is it going to head lower? I'm going to say that I'm not 100% sure that that's going to be the case. And why do I say that? Because the money supply is pulling back. That's that M2 money supply that we look at. Let me pull it up here real quick so you guys can see what that looks like. There's the M2 money stock. This guy is rolling over, and it has contracted a little bit from its peak. And I do think that a potential slowdown is possible with this money supply basically going sideways. But this is, remember, the M2 money stock is lagged. So we had this massive move higher. And that won't happen till about 18 to 24 months behind March 2022. So I think we're probably good till all the way out till about 2024 in terms of money supply increases and inflation. But we do see that maybe late 2023 or something like that we could see a slowdown in the back half of 2023 based off of the M2 money supply. But that money supply is just the money in the system. That doesn't necessarily mean that if we have an energy crisis, that money will rotate into energy and into the consumer price index. So it's a combination of those two things. It's money coming into the system, and then if there's any constraints in the system, that would also be inflationary by the way that we measure it in the consumer price index. But this will definitely slow us down in terms of kind of like a stagflationary environment. TLT, this is bond prices on the 20-year. We're down a little bit today. We had a little bit of a bounce up the past 3 trading days before this one. We're still in a massive downtrend, but it looks like it could be trying to bottom here. So we need to watch to see if this is bottoming. Bonds could be a decent move in the short term where we could see a little bit of a bounce like this. Then I think they're going to roll over and head lower again. But we could see a bounce in the short term. TYX, this guy is heading higher today, 0.86%. Again, we can draw a trend line kind of just off this guy here, and this guy has not broken that trend yet. Looking at the TYX to TNX, we're still low, grinding sideways. Generally speaking, when this goes up or higher, that is positive for precious metals, generally speaking. But we're lower today, so it's a little bit of resistance to the precious metals move, especially with slightly stronger dollar and a weaker TYX to TNX ratio. So looking at commodities, we'll go to commodities first. We are still bouncing back and forth. We did see some stronger selling pressure today in the CRB index, down 1.51%. We are still in a corrective phase, and we have not come out of that corrective phase. That corrective phase started in June of 2022. So we're still in this corrective phase. We haven't done the full bottom yet. We could, at any second, turn this thing around if oil wants to go higher here. CRB to S&P 500, we're pulling back. The S&P 500 was up today. CRB index was down. It does look like we're in a kind of corrective phase where the S&P 500 could outperform in the short term. Gold heading a little bit lower today, not getting the right market conditions, but still, this isn't a reversal candlestick or anything like that. It's just a down day, and we'll have to see how this transpires here over the next week or two. We've got a lot of overhead resistance above us, multiple lines of trend lines that are converging above our head. So we have to break through all of that. And usually what drives the gold price is the M2 money supply going higher. And right now, that M2 money supply has been going sideways to lower. Let's look at that again. M2SL. Sorry, M2SL. And that money stock since February, March has been going down. So gold has been getting a headwind from this, I think. M2 money supply. Silver also heading a little bit lower today. I think what gold, silver, and platinum, kind of all these things, are sniffing out a potential, maybe a pivot is what they're trying to price in. Again, this is the market speculating on this, not me. And we are going sideways, so I think that they're speculating that the money supply will increase at some point, maybe because of a bond crisis, whatever reason it is. No one knows the exact reason, but it is going sideways, looking like it's trying to position itself for a move higher. And then platinum also getting a little bit more selling pressure. Yeah, we could pull back a little bit before a move on up. This is a bearish engulfing pattern. And that's platinum there, where we could have a little bit of a pullback. Now, we'll have to see how big the pullback is if we get one. I don't think it'll be huge. XAU to gold ratio, we're up a little bit, 0.3% on this ratio. And this ratio is sitting on top of that support level. So hopefully we can get a nice move higher. What that means is that the gold and silver mining companies will do better than gold. It'll outperform gold. So when looking at, and we have not broken the big long-term downtrend. That's still, we need to break that for a big monster move. GDX, looking at the ETFs itself, just moving sideways, slightly lower, less than gold. And then SILJ also just moving sideways. It's a little hammer candlestick that we just put in. I think, downward movement, we've broken out, and it's just kind of rolling sideways on a support level for SILJ. Crude oil, small little down day today. It's nothing to worry about. We just had a small down day today. I think it's handling this down move quite, we'll say, in stride. and it still looks good to move on higher. I don't see any worry here in the chart pattern, at least not yet. Natural gas, a small down day today compared to the volatility that we've seen this past week, the beginning of the week. But yeah, I think it looks good. I think we're going to bounce around a little bit down here with this momentum that came down, and then I think we're going to go higher. Why? Because I think we're going to become more interconnected with the international markets, the TTF, Dutch, natural gas. And natural gas, remember, that is limited by storage over there, and then it becomes a flow rate issue. Just because you have 100% storage doesn't mean you have enough natural gas for the winter. Keep that in mind. XOP, yeah, you know me, putting in a down day. Like I said, we were going to have a down day, and we wanted to see what today would bring us. Well, we were down, but it bounced off that support level. That is what we want. Buyers came in here, bought it up, and I think it looks good. Now it just depends on what oil wants to do. If oil goes on higher, I think we're going to see XOP do well. And then looking at OIH also bouncing. Now, I put this in here. I said, well, are we going to get some sort of pullback out of here? That's what I've got there. Is it a pullback? Are we going to pull back and go up? Or are we going to get some stronger buying pressure? We come in a kind of U shape or just move sideways for the pullback. Now, I don't know how big this pullback. It could be something on the lines of that. It could be something on the lines of this. You know, that's stuff that I obviously I don't have a crystal ball. I can't tell you what it's going to do, but that's what I'm looking for. We get a smaller move to the downside is actually more bullish for energy service companies. A larger move is still bullish. It just takes a little bit longer for it to play out. So which one's right? I don't know. We'll have to wait and see. And you should have already been positioned earlier and been waiting for this, and then instead of waiting for this. But now, if we get a pullback, that's great too. Use it as an opportunity. UX1, which is the uranium futures pricing, that's slightly higher today, 0.19. Everything looks good. I don't see any problems here. Looking at the Sprott Physical Uranium Trust, a small down candlestick on the weeklies. The dailies, we are just moving sideways. So I don't think the selling pressure is necessarily there. I don't see any large selling pressure yet, which is good. It is still ready to move on higher. We've got this nice, large buying pressure, and I don't see too much selling pressure. So I think there's a high probability that we can go and break out of this thing to the upside. And it looks very good for a potential move higher. Still, URNM, looking at that ETF, we do have selling pressure yesterday, but we came back and the buyers putting a little hammer candlestick in there. So we bought it back on up. Still looks good. And now we're just waiting for the buyers to carry us higher. We've got support underneath us. We're in that, what we call the Livermore cylinder. So we've got a nice, good Jesse Livermore cylinder going on, and hopefully we can get some launch going on there. Looking at TAN, we're getting that nice, good bullish engulfing candlestick on the weeklies. The dailies, yeah, we were down a little bit, but that's a hammer candlestick. I still think it looks good. Again, this is highly speculative for the sector. It's dependent on funds flowing from, we'll call it from governments and being subsidized and all this other stuff. It is not a cash flow machine, not like oil, natural gas, and some of those. COPX, it was down today, but we do have a bullish hammer candlestick. Those usually resolve themselves higher. People were buying up at the end of the day. And if we were to look at this from a kind of a daily perspective, you can see that we were selling off, but then buyers came in and started buying it up at the back half of the day. That's what those wicks are. This is just looking at it from a different perspective. You open, you sell off, and then you bounce up for a wick at the bottom. It's a reversal candlestick most of the time from a statistical probability standpoint. So that's a COPX. And I do like copper still. Broken down trend, moving sideways. Looking at lithium. Lithium's also, it was down today, it gapped down, but it was bought up throughout the day. And right now it's just kind of moving sideways there. We're at this supportish area. Looking at REMX, right at support, nice good hammer candlesticks. We sold off and then got bought up throughout the day. So that's looking right? It's looking right at support. It's using that support area. We're bouncing around at that support area, and that's usually what it does before a move higher. SPX, ripping it higher, definitely looks like we're going to continue that move to the upside. And in my opinion, on a longer term perspective, I think it will create a bear trap. So what does that mean? A bear trap is when you basically do a double top. So we hit this top here, and we rolled over, lower highs, lower lows. We could come back up and do another top, or we come up and hit some other level somewhere in this range, or we hit here where this trend line is. It's going to look something like that, is in my opinion. It's going to be a double top. This is a bear, or a bull trap, I mean. It's a bull trap where the bulls get caught in it, and then it's going to rip lower again at some point in the future. What's going to cause that? Well, it's our commodity shortages. Commodity shortages, energy crisis, all that stuff that hasn't gone away. We've just are delaying this move. And remember, they usually pump this thing right before elections. So in my opinion, I think it's a false move. I think people are getting overly positive on it, and I think we will continue higher in the short term. The ultimate top, we'll have to see where it peters out and turns. And it very well could be at this level where it's somewhere on the lines. It's probably like there, and then this guy coming down. Probably going to head up to 4110 or something, 4106, 4105, I don't know, somewhere in there, and then roll back over. We could do a double top even, and all the way at 4800. So nothing's going to stop it. There's nothing stopping it if it does go that high. I should say there is things stopping it, but it could go that high and do a double top. I'll just put it that way. And it's a bull trap, in my opinion. The NASDAQ also heading higher. What we're getting there is some nice strong buying pressure. Let's go to the dailies here. You're seeing that green army that I call it, buying pressure, buying pressure, buying pressure. That does look like it wants to go higher. The ultimate top is where it's debatable. Where is it going to turn? And it could very well turn at this next kind of trend line somewhere in that range there. If we break through it, I think it's a double top. Why do I think it's a double top? Because we haven't fixed any of the problems in energy or commodities. And all this is, all technology companies is an efficiency play on creating end products and or extracting things out of the ground. It's basically just one big efficiency play. Computers make people more efficient, so on and so on. So technology is basically an efficiency play of harnessing, gathering either energy or whatever it is for products. EEM, another one where it's slightly lower today, dollar slightly higher. I'm not really playing emerging markets at this time, but that's what it is going on right there. And we've got, we're playing at that support level on the long-term big picture view. XHB, this is the home builders ETF. This is the big picture view. We could come down here and tap it if it wants to. But today we were getting some buying pressure, up 1.71%. This looks ultra bullish to me. Now, we've got a bunch of green candlesticks, not much selling pressure. This looks like it wants to go higher. We've got a broken down trend. Everything looks good. And when this goes up, that is inflationary. Not the home builders itself, but when the housing starts go up, and if the housing starts are positive and the home builders are positive, then that is usually the volume of loans into the system is inflationary. We're seeing the M2 money supply peter out and go straight. So we'll say the Fed doing its QT is offsetting the home builders in the home starts and the new loans going against those home starts. It is offsetting that. Looking at Moo is heading higher. We got the green army coming up. We're right below that resistance level. We just got to break through it. It looks good though for MOO. Looking at copper. Copper's been moving sideways. We're getting mixed signals here with large candlestick up days. We're getting a little large down day today. Which way is this thing going to break? It's just moving sideways. It's undecided at this time. Lumber also heading down a little bit. We're seeing that divergence between lumber and the home builders. But this is a return move. I do think we've got support underneath it at about 440. We're at 458. This could turn on higher at any second. We've got iron ore. So iron ore, I've been watching iron ore for dry bulk shipping. This does look like we're coming into a corner here. We're looking at the weeklies, and I do think that this is right at support, and we could bounce here. Why do I think that? Well, iron ore in the chart here is consolidating or converging to a point where it usually likes to turn and head higher. It very well could break lower, but generally when you have a falling wedge, and that's this wedge down here, I can leave it in there. Generally on a falling wedge, it's a bullish candlestick formation where you can break to the upside. Aluminum right at support, and we're just petering out here. We do have stronger selling pressure on the weeklies, and we're coming on up, and usually we might get another bounce lower before a move higher. So I've been watching some of the aluminum stocks, waiting for this thing to bottom out and kind of move on sideways. And we are kind of coming to a point. It's gonna go somewhere fast soon, and we're coming into a dead period. So we'll see if that thing breaks higher. If it breaks higher, I like some of the aluminum companies. And then we got Baltic Dry Index. The Baltic Dry Index is heading lower. It looking like it's coming back down. Is this a leading indicator of where iron ore and or aluminum is going to go? Not too sure on that. But the companies were kind of flat today, but the Baltic Dry Index was a little bit lower. And we're coming right below the support level, resistance level. So we're playing with this support resistance level back and forth, similar to what it did kind of like back here. So that's what I've got for today, guys. If you guys need help looking at some of these companies and you want to see where to go, then yeah, sign up for the Platinum membership. It's in the description link over here. And we have a question and answer session on Saturday, 7 a.m. Mountain Standard Time. That's tomorrow. Definitely show up, see what's going on there. Ask me questions. We can go over it together. And that's all I've got for today. So hopefully you guys are having a good day. We'll catch you next time. This is Finding Value.